Welcome to the road to 1 million US dollars. Let's get right into the Bitcoin chart for today, starting on this 1 day time frame for Bitcoin, where right now we still have this potential hidden bearish divergence flashing here in the charts, which could be a warning signal here that is about to confirm. In yesterday's video, I talked about this potential hidden bearish divergence as well. However, we have not really seen this confirm yet because, as I said in yesterday's video, we need to see a red daily candle close below this previous high here to actually confirm this hidden bearish divergence. And I talk a lot more about this hidden bearish divergence in yesterday's video. It is called Bitcoin warning signal flashing. So if you're interested in getting a lot more information about that, then just watch the start of this video that I uploaded yesterday. Today, I'm going to keep it a little bit short with regards to this warning signal that is flashing. However, the summary of what you should know about this is that now if we get this red daily candle close, we have a confirmed hidden bearish divergence in the charts. And even though this isn't a regular bearish divergence, it is a bearish divergence nonetheless. And usually what a bearish divergence indicates is that we are going to get a break from all of this bullish price action that we saw here recently. So usually this plays out either with some choppy sideways price action or potentially some bearish momentum on the 1 day time frame. Of course, we should also talk about invalidation of this hidden bearish divergence, which is also very clear. For example, if we now make a higher high in the Bitcoin price and get a confirmed candle close above this previous high, then this would invalidate the hidden bearish divergence. Or if you see a move above this trend line on the daily RSI, this would also invalidate the hidden bearish divergence. Although, as I said in yesterday's video as well, watch out if you see something like this, where yes, we invalidate it here on the RSI, but we do not make a higher high in the daily time frame price action. Because in that case, we could basically just redraw this trend line here and we would still have a hidden bearish divergence in the charts with the exact same implications as I mentioned here earlier in the video. So again, make sure to look out for that daily candle close, which is happening in about 5.5 hours from now, because this could be that early warning signal of a potential reversal in the price. And something else I noticed here is that now on the daily MACD indicator, we are potentially getting a second day that is closing below the previous one here. So this indicates a slowing down of the bullish momentum. And yeah, again, if this trend continues here, then at some point we are going to flip into bearish territory once again. And I remember giving this exact same signal when we saw this right here, and we had a second day of this bearish momentum slowing down, which also aligned with this exaggerated bullish divergence. And it was a pretty similar setup, right? Now, another thing, if we just take a look at the broader trend here on the daily time frame, we obviously have this descending channel that Bitcoin has been consolidating in for months here. For now, we only touched the low of this descending level of resistance. But let's say that we now get a reversal, then we could say like, yeah, it touched the top of the descending channel and then reversed back to the downside. So that is just something to be aware of as well. If you would look back at this retroactively and you would look back at this, then you would say, well, we touched the top of the descending channel and just got a move down lower. So it could have been expected at that point. However, as I said in yesterday's video as well, if we actually zoom in to the lower timeframes for Bitcoin, you can see that we are still holding above this Fibonacci golden pocket, sitting between 62,000 and 62.7K. So for now, I would say so long as we keep holding above 62K, roughly speaking, then yeah, as far as I'm concerned, then I'm still basically just bullish and expecting this uptrend to continue here. However, if we now see a break of this 62K level of support, then my expectations kind of change here, because at that point I would expect another move down lower, potentially down to this 0.5 level, sitting at 59.5K for the Bitcoin price, which could be a short-term level of support, especially around this 60K level. If you take a look at the bigger support and resistance levels for Bitcoin, it would look something like this. We would get a move below 62K, and then if that actually happens, then I think it is very likely that we go to the bottom of this big level of support here, again sitting around 60,000 US dollars. In terms of resistance to the upside, we basically got another perfect rejection from this recent high here on the 4-hour time frame. This level of resistance is sitting at about 64.3K, roughly speaking. And then above that, we have this big level of resistance sitting from 65,000 all the way up to 66,000. So now if we get another move to the upside, these could be some potential levels of resistance to watch for a potential rejection back down once again. Next, moving on to the Bitcoin liquidation heat map. First of all, on the 1 week time frame, you can now see that we took out this big level of liquidity to the upside, sitting at about 64.4K. So we ended up getting that bounce from that Fibonacci golden pocket that I mentioned earlier and sweeping this liquidity here. And as I said in yesterday's video, make sure to watch those big pockets of liquidity for a potential reversal. And now you can see that we swept this big level of liquidity here perfectly and then reversed perfectly from that level as well. So sometimes I get questions about this Bitcoin liquidation heat map, asking if it's like legit or something like that. For me personally, in my experience, I've seen that these Bitcoin liquidation heat maps can be useful as confluence to look for a potential level that the price can get attracted to or even reverse from. Now, if you want to learn more about how to actually use those Bitcoin liquidation heat maps, I created a free trading course which you can find on rt1m.com. So go check out my website and you can register here completely for free and get access to the full trading course where I not only talk about the Bitcoin liquidation heat maps, but just about how to do technical analysis in general. And as I said, you can check it out completely for free. Coming back to this Bitcoin liquidation heat map though, on the 1 week time frame, you can see that right now, most of the liquidity is actually to the downside, sitting at about 62.2K, which is again in that Fibonacci golden pocket that I showed earlier in the video. And if we take a look at these different Fibonacci levels here, you can see that 62.2K is also right below this 0.786 Fibonacci level, sitting at about 62.3K. So I do think it is likely that we are going to get attracted to that big level of liquidity. On the lower time frames, it would look like a move below this big level of support, sweeping the liquidity and then bouncing off from there. So that is just something to be kind of mindful about. Like, you could see a move down below this level of support just to grab the liquidity and then still bouncing from there on the lower time frames, where on the higher time frames, for example, the 1 day time frame, it would just look like a wick, similar to what we saw right here when we swept that big level of liquidity to the upside. If we zoom out to the 3-month time frame though, you can see that, we have a lot of liquidity to the upside and to the downside. And this is because, recently, if you just take a look at the last couple months in terms of the price action, we have just been chopping sideways for months. And usually in choppy sideways price action, regardless of if it is on the higher time frames or if it's on the lower time frames, you will get liquidity to the upside and to the downside due to that choppy price action, and a lot of people being long and a lot of people are short at that point. So just based off of this liquidation heat map, I think if we break above this previous high here at about 64.3K, roughly speaking, we really get that confirmed daily candle close, for example, then I think it becomes a lot more likely that we end up sweeping this liquidity to the upside as high as 71.2K for the Bitcoin price. Though, as always, keep in mind this descending channel on the 1 day time frame, for example, because we would really need to see a break above about 67,000 US dollars first. But as you may notice, we also have a lot of liquidity even up to that level. So for example, there's $400 million worth of short positions that would get liquidated if the Bitcoin price reaches 67,000 US dollars. And we are already trading pretty close to that price on this higher time frame. So it wouldn't be crazy to see another, even if it is just a quick move to the upside, to sweep a bunch of liquidity here. But as I said, make sure to look for a daily candle close above that previous high here, because that would at that point invalidate the hidden bearish divergence. So it would invalidate that potential bearish signal that is currently being priced in. And because of that invalidation, likely the Bitcoin price will go higher after that. Now, lastly, taking a look at the Bitcoin ETF flow tables for today. Yesterday, we saw a net inflow of about $92 million from these Bitcoin ETFs. And as I have been saying for over a week at this point, so long as we keep seeing massive inflows into these Bitcoin ETFs of hundreds of millions of dollars worth of Bitcoin being bought every single weekday, then likely this is going to have an upwards pressuring effect on the Bitcoin price. So in conclusion, so long as we keep holding above 62K, I would say so far so good, and likely the uptrend will continue. However, if we now get a red daily candle close, I think it becomes more likely that we are going to revisit 62,000 US dollars, or just that Fibonacci golden pocket in general. And if we lose 62K as a level of support, then I think it becomes very likely that we end up going down to 60,000 US dollars or lower, and it could actually be that potential reversal signal in the price. Now, obviously, this is not financial advice, but I'm simply telling you what I'm seeing in the charts, and you can do with that information what you like. So this has been today's market update. Don't forget to go check out rt1m.com for my free trading course if that is something you're interested in. But either way, even if you do end up checking it out or not, thank you for watching once again, and I will see you tomorrow in the next one.